We have with us Sanjay Kukreja, CIO and partner at private equity firm ChrysCapital. Welcome to ET Now, Sanjay. Last year was a bit of a slow year for deal making for private equity venture capital. What's the pace of deal making you see now? Is it picking up? What's your outlook for both the industry and for ChrysCapital?
So private equity as an overall industry, so we went from I think when we first started investing, it was less than $1 billion of private equity money that came in. In 2007, the peak year, we saw some $15 billion coming in, and then it, went down back to 8 billion, then 4 billion, and stayed at a low for a while. The peak that you were talking about, it reached about 60 billion, and then last year came down to 40, right? But bulk of that slowdown actually was in the VC/new economy space. Right, which had some 20-25 billion, and that fell down to about 5 billion or so, right? So that's where most of the, the slowdown, the funding winter, and all of that, the narrative that got built. The core private equity in outside of new economy actually didn't see that much of a slowdown. Frankly, sectors like pharma, healthcare, IT also slowed down a bit because of the US sort of, recessionary trends and slowdown in that. Therefore, there was less sort of money flowing in. But pharma, healthcare, other sectors, consumer, all of that actually saw an increase in the overall deal volume. So I from at least where we, in our pipeline, we didn't see much of a slowdown. In fact, we raised Fund 9, and that Fund 9 was investing in this vintage over the last 18 months and 18 to 24 months. And we've managed to get almost 60% of the fund invested over the last 2 years. So which is a very healthy pace. We wouldn't want to do it any faster than that.
Right.
So yeah, I think there are a couple of sectors that saw a slowdown. But if I think about looking at the future, right, I do see a pickup in IT services. I guess the demand environment starts, improving here on. Is it the absolute bottom? One can never call that, but I think the commentary is definitely improving, and the demand outlook seems to be improving on the IT services side, pharma, and BPO as well. And so I think deal making on that side will pick up coming years. New economies also sort of bottomed out and started to see somewhat more traction now. So overall, I do see a reasonable pickup this year in deal activity. Albeit we didn't see much of a slowdown last year either. Just to caveat that out.
Yeah, you raised $1.3 billion in 2022 through Fund 9. Some granular details how that experience of deploying that money has been.
So it's been like I said, the pace has actually been pretty interesting. We've ended up doing almost 60% of the fund deployed over the last, 2 years. It's been across sectors. We had a large IT services investment company called Zorient, where we came in early enough, where we did see some headwinds in the business, right, which is linked to the overall sort of macro that played out. But I think the deal was priced well, and we feel like it's in a good space. If you look at some of the other deals that we did HDFC Credila, which was buyout along with EQT. I think it's a phenomenal company, and the growth rates and even post sort of completing the transaction, the first year has been on a roll. So we ended up doing, growing really, really well. North of 80% growth in the business and the profitability. So much ahead of plan. So that's actually done really well in financial services. And then we've seen, a deal we've closed in the healthcare side, a company called Center for Sight, a CFS. We like the single specialty space. We like that quite a bit. I think this is a great company. We just recently closed a deal there. We've seen in our pipeline, a lot of traction in consumer. We're seeing traction in IT as well. So, overall sort of healthy mix of sectors. Like I also said, from a construct point of view, almost 50% of the deals are either control or joint control deals in this fund. Right, we'll already ended up making about 8-9 investments already, and a couple there in the pipeline. So good pace. Very happy with how the fund is coming together.
If you see your past, ChrysCapital's investments have tended to tilt towards financial services, tech, pharma and healthcare and new economy. Is there some kind of change in positioning in your preferences of sectors of industries that you're currently going through, and how will the portfolio in the future, how would you ideally want it to look in terms of which are the sectors you feel they may have been hot in the past but may not be so hot going in the future, but there are sectors which are very emerging where you would want to increase your exposure?
Yeah. So we are, for us actually, the 3-4 core sectors that you called out are the ones where we are, doubling down on. These are the sectors we believe we have real sector expertise in. We've actually done, in IT services, for instance, over 30 investments, seen the life cycles. We know these companies well. We know, management teams really well. So we have a whole network, and it all builds onto it itself. So our ability to actually make, even whatever the sector might be, right, our ability to actually make returns in that sector become, much higher because of our ability to increase margins, do M&A, bring M&A transactions to the fold in some of these companies, figuring out how to pivot companies and build them to be a much better companies than what we acquired them, at the beginning. So I think that becomes a very important aspect of, is not just, how a sector might be hot or not hot, but what can you do with the business as well, right? And I think we've built that muscle over time. So I would say these core sectors, enterprise tech, right? Is a big area for us. Pharma, healthcare is a big area for us. Financial services is a big area for us, and consumer. And within enterprise tech, I think we've seen some of the, the move shift from just services and this thing towards SaaS businesses. So we did our first SaaS deal also in Fund 9, right? Okay. And we're going to see more action.
Which one was that?
It's a company called ProHands, smaller deal, right? It was about 50 million or so. And it was a buyout actually in a SaaS space for workforce productivity, right? A very successful product here in India. Our plan is to take it global and sell it to enterprises in the US. Their end customers here are actually more IT services companies, which we know really well. So we feel that we have an ability to actually help them increase their business on that side as well, and IT services / BPO. So enterprise tech, we see a little bit of a pivot towards SaaS. That is what may happen in the future for us. If you look at, because there's also a little bit of a slowdown going on in main IT services, but in coming future years, as we look at that, I think that start getting better. Last year was a really slow year, but I think it's probably bottomed out at this point. Financial services actually, frankly, has seen less action in the last year, has been in overall in private equity, but now seems to be picking up. The sector itself is doing really well. Certain subsectors within that, I would say housing finance, for instance, insurance are key areas for us, and we continue to focus on those. Within pharma healthcare, I think we've done a lot of work in minority investments in pharma, but I think now we're looking to do a control transaction, a buyout in pharma if we can, looking at brand acquisitions. We've also would love to do healthcare, more of healthcare. So Center for Sight is one large transaction that we did recently, but I think we'd like to do a lot more. And we think there's a lot of there's a lot of tailwinds in that sector for many years to come. So that's how I would sort of classify it. Outside of this, we've not been big investors in manufacturing. I think we're still sitting and evaluating that. We want to see some companies play through. I think we're seeing areas like medical devices, for instance, which we capture more in pharma healthcare side, doing well. But broad-based manufacturing, they say textiles or electronics and all of that, we've not really done much of that. And I think we're evaluating that and taking our view slowly, forming a view slowly on how to sort of play that space well.
Are you happy with the exits you have made in the recent past? And can you give us some examples of those exits you're very proud of?
So, fortunately, we've had a lot of them, right? So we have now reached, over 80 companies that we've exited out of the 100 that we've invested, right? So very fortunate. We've not got stuck in most, in any of the funds or any of the companies. We've now closed funds 1 through 6 fully, right? So there's a real track record that's been created. what we see is, there have been many over this period, we've almost returned or realized north of $7 billion, right? So this whole track record and the whole system that works has actually been, put out there. And ChrysCapital's track record is something that I think it's a proud moment for all of India, not just ChrysCapital, right? And I think that's something that we are super proud of as well. Lots of examples of over 10x's as well, right? We talked a few about those, but Shriram Transport, for example, we didn't talk about. Great company in Fund 3, $25 million investment back in 2003. Ended up returning a $250 million plus fund back for us. Again, it was a public exit that we did in that situation. Great story, bringing 4 different companies together, merging them together, and then building it out from there. AUSFP will stand out as again a very large ROI. Intas, Mankind, HCL Tech back in the day was a very large investment for us in Fund 4 and 5. Ended up doing a very large return for us, right? So return was phenomenal there as well. So we've been very fortunate to have backed, some industry leading names and seen, spectacular exits in these over the years.
Yeah, and what's the outlook on the investment landscape going ahead, in the coming months, going into 2025? And how do you feel ChrysCapital can do better in the coming months?
So I think from an investment outlook perspective, I would say, certain sectors, the growth and the outlook is actually improving quite a bit. I would say pharma healthcare continues to be in the, sort of solid position in India. There's tailwinds of growth, penetration is still increasing. Lots of different categories that are still underpenetrated. I would say the same for financial services. You look at, things like, general insurance or health insurance in the country is still very underpenetrated. Room for growth over multiple, decades to come in the future. So those sectors I think will continue to get a lot more traction in the next, year or two. I think IT services starts to see improvement. It has been in a little bit slow period in the last, 2 years. Starts to see improvement in the coming year and year forward after that as well. That would be my expectation. I see a lot more traction on financial services. Even though the markets have been on a tear, I think financial services have generally lagged a little bit. Our historical experience has been the opposite actually. When the economy does really well, financial services ends up doing really well. So I do expect there's to be some catch up, and optimism around financial services that may play out. We're seeing a lot of traction in consumer as well, on QSRs, on certain brands, that we are seeing on the consumption side in India as well. I think as India gets richer, consumption is actually, going to play out. I think it's been a slow consumption year again. In the last year or two, it's been relatively slow. Lots of theories around why that may play out, lots of conjecturing. But I think there's again catch up that we expect will play out in the next year or two. So IT services consumers sort of start moving into faster growth in the next couple of years. I think you have pharma and healthcare continuing to grow robustly, and financial services has a sort of a little bit of a catch-up play. So those would be my calls for the next couple of years from a sector mix point of view.
Sanjay, thanks for speaking to ET Now, and we wish you all the best.
Thank you so much. A real pleasure for having me here.